You've been searching for the best way to generate passive income in your life and heard that real estate is a great way to do it. But you're tired of all the so-called gurus who are all talk and no substance. Get ready to celebrate because Kevin Buck has spent 14 years successfully making it happen. This is the Real Estate Investing for Cashflow Podcast. Now, here's Kevin Buck.
Hey guys, Kevin Buck here. I want to welcome you to another episode of the Real Estate Investing for Cashflow Podcast, where our mission is to help you build and maintain massive amounts of cash flow through income-producing real estate investments. Our guest for this week's show was real estate investment expert Corey Peterson. Corey is the founder and managing member of Kahuna Investments, a value-added real estate investment firm that specializes in multifamily and student housing properties. As the owner of Kahuna Investments, Corey strives to provide his investors with stable cash flow returns and long-term capital appreciation by buying multifamily apartments. Corey has managed and acquired over $95 million in real estate across the country. He's also the best-selling author of Why the Rich Get Richer, The Secrets to Cash Flowing Apartments, and also the host of the Multifamily Legacy podcast. He speaks around the country on this subject, including at Harvard and NASDAQ. Corey is frequently also featured on Fox, CBS, ABC, and NBC affiliates. Now, I first met Corey at a mastermind that he and I are both part of. We're both members of. It's called The Collective Genius. And I can tell you that Corey is one hell of a firecracker. That's the best way to put it. But the cool thing is that this dude's energy, it's off the charts. And it's kind of a good thing because he's directing that energy into kicking ass with his real estate investment firm and also helping others do the same thing along the way. So guys, I'm really excited to get onto the show here with Corey. But before we do, here's a quick word from our show sponsor, Sunrise Capital Investors. Hey guys, Kevin Buck here with Sunrise Capital Investors. As you are hopefully already well aware if you've been a listener for any period of time, my goal has always been to provide you with as much value as I possibly can through my two podcasts, Real Estate Investing for Cashflow and the Mobile Home Park Investing Podcast. As our audience continues to grow, literally, we've been downloaded millions of times by folks in over 125 countries. I've had thousands of people reach out looking to get involved in our niche. And that's the phenomenal niche of mobile home park investing. For those that don't know, I've been a full-time real estate investor for nearly 20 years now, and I've personally invested in and have owned apartment complexes, various commercial properties, hundreds of single-family rentals, and I've interviewed some of the most successful investors in just about every other asset class, and I've arrived at this one very simple conclusion. Mobile home parks are hands down the best investment I've found to date. Why? They provide investors with the best risk-adjusted returns out of any other real estate sector that I've seen. Investing in real estate can get complicated, and I really want to simplify this process for you. If you're someone who wants to diversify away from the uncertainty of Wall Street and allocate a percentage of your real estate portfolio to mobile home parks, but maybe you don't have the time nor the inclination to personally locate good deals yourself, then our team will do it for you. At Sunrise Capital Investors, our team specializes in the acquisitions and management of undervalued and highly profitable mobile home parks. And we are now providing accredited investors with an opportunity to participate directly alongside our team in our up-and-coming deals. And let me say this, I believe that we are hands down the best in our space at sourcing highly profitable off-market deals. That's really what makes us unique in this niche and as investment managers. As stewards of your capital, we truly are aligned with our investors. We've structured our investment fund so that we as a company are incentivized in the same way the investor is, which is through the performance of the investment itself. In addition, we want to make sure that we not only make money for our investors, but that they understand how it's being made. That's why we provide our accredited partners with a private monthly podcast that walks them through the detailed updates on how their investment is performing. And we're very transparent, providing you with the good, the bad, and the ugly at times. And so if you'd like to learn more about the partnership opportunities with our team here at Sunrise, please go visit sunrisecapitalinvestors.com and click on the investors link to get signed up. It's absolutely free and you'll get placed on the priority list of when new opportunities come along. Also, feel free to call us at 833-CASH-FLOW without the O. Again, that's 833-CASH-FLOW without the O. And one of our investor relations team members will help you schedule an appointment to speak with one of our managing principals. If you have questions, go ahead and schedule a call and let's get on the phone and talk. And with that, guys, I like to leave with one last thought. From the time that I wake up in the morning till the time that I lay my head down the rest of the evening, My number one priority with everything I do, whether it be recording this podcast, working for our investors, helping each of you reach your investment goals, to providing a great experience to each of our residents who reside in our communities, is to add huge amounts of value to everyone that I come in contact with. Now, with that being said, I look forward to the opportunity of bringing value to you through Sunrise and through this podcast. Thank you for your time. Now, let's go ahead and get back to the show. All right, guys, without further ado, I'd like to welcome our guest for today's show, Corey Peterson. Corey, how you doing today, brother?
Oh, man, I'm doing awesome, brother. Dude, thanks for that wonderful introduction, man.
Yeah, man, you are a firecracker. Your energy level's like through the roof. I kind of compare you to like you and Tim are Tim Brotz are like the same, man. Like I get around you guys and I get all warm and like, like I start sweating. I'm like, damn, I got to like jack up my energy a little bit. So I just try to drink coffee or go run around the block before I go.
Yeah, it's like, let's go do something.
Yeah. So in any event, Corey, I'm real excited to have you here, brother. And just real quick, for those that aren't familiar with you, that haven't heard about you or don't listen to your podcast, why don't you take a few minutes? I'll pass the mic back to you. Tell us a little bit more about yourself, your background, and how you got into real estate.
Yeah, man. I started off like probably a lot of people, broke and I didn't even know what the hell I was going to do. I barely made it out of high school. I wasn't voted most likely to succeed. And, if you don't have a degree in life, you either got to manage some crap or sell some crap. And I did both. I sold used cars for a long time. I sold used cars. I actually sold Kirby vacuum cleaners at one time in my life. Until I met a girl and she changed my life, and she actually became my wife for the last 16 years. And one day she called me and said, I can't marry a used car salesman. So now she wasn't kidding. And so immediately I called and I found a job interview as a restaurant manager. And then she never really saw me. But I didn't get the download from the mothership till like I was 32 years old. That's almost 17 years ago. And found my true calling of real estate. Actually, what happened was my mom was married to a man named Bruce. And I call him actually Bruce Wayne. Now, he's not Batman, but the guy was loaded. And so she invited me and my girlfriend at the time, with Shelly, my wife, to Hawaii. And we're like, oh, of course, yes, we want to go to Hawaii. Well, come to find out, Bruce has a home right on the beach, and it's just amazing. And so we go there. I remember walking on the beach, and it was on a cove, and like there's a freshwater stream coming from the mountains above, going into the ocean. I watched the sun come up, and I'm sitting there, and we're just amazed by the whole thing. And then I look over at Bruce's house, and I'm like, what does this guy do? Because like he had nice cars, he had a house on the beach, he had fine art, and his phone was not ringing. Like he did not seem busy at all, no cares or worries. And so I asked him, I finally got enough like gumption to ask him, like, what do you do? And guess what he said? I own real estate and I own apartments. Now, unfortunately, Bruce was a prick, and he was never going to teach me real estate. but he gave me the perfect vision of what I really wanted, which was time and money. And he said real estate was the way. And so I read in 2004, I read Robert Kiyosaki's Rich Dad Poor Dad. That book changed my life. And all of a sudden I was like, oh my God, that's what Bruce did. He's a real estate investor. It was like the instruction manual. So in 2005, I started my company and I named it with the end in mind. I called it Kahuna Investments because I wanted to be the big kahuna like Bruce. I started off as a wholesaler. I didn't have any money or credit. I'm finding wholesaling deals, and I actually moved to Phoenix. And I was living in Tulsa, Oklahoma, moved to Phoenix, Arizona. I ran into my first roadblock because I ran out of money. I took a home equity line of credit out of my house in Tulsa, and I bought some real estate. And then when I ran out of money, I'm like, oh, I guess I had money in real estate deals, and that was it. And I had no more money. And I got a job, so I had to go back and get a job. And I got a job as a financial advisor with Edward Jones. Now, probably the best thing I ever did, because Edward Jones taught me about money, private money, right? Or how the world of money works, stocks, bonds, mutual funds, the whole gamut. And it really also taught me how to talk to capital.
Yeah.
And then we all know what happened in 2000. So I'm wholesaling, and then the market crashes, right? 2008, 2009. We all know that story. And what a horrible time to be a financial advisor. And in that moment of like, I lost all hope of being a financial advisor. I gave up that dream, and I came on the upside of real estate, where it was at its downest part, probably in our history of what we will ever see, right? And I remember sitting in my Edward Jones office because I got fired because my sales were down, right? Like when grown men and women are coming to your office crying, 65 plus, crying because their whole life savings were down the toilet, and then you had to charge them a commission to move their money. You want to talk about feeling like scum of the earth. Yeah. And I had no control. And so I sat there in that office, and I went there at 8:00, and I could tell the call had been made. Like I was going to get because I had an appointment at 10:00 with my manager. So for 2 hours, I sat in my office. I was like, what's plan B? What am I going to do? And I immediately thought about Bruce and living that lifestyle. I'm like, man, if I don't do this, I will forever hate myself. And so in the space, being alone in my office, all by myself, I made the most gut-wrenching, most true, most honest, everything that I am commitment. I made it to myself that I would be willing to do whatever it took to be successful in real estate. And man, I mean, it was a defining moment for me. And at that moment, everything in my life changed. So I started off as a wholesaler, and then when I was wholesaling for like $3,000 or $4,000, but the guys that I was wholesaling to, I was also managing their rehab projects, and I was making them like $20,000 or $30,000 per flip. Mm-hmm. And so I was like, man, if I can just raise some private money. And so I raised my first piece of private money by accident. I was actually asking a friend, I'm like, hey, Carl, listen, you watched me do this. You live in this retirement community. I didn't think Carl had any money, by the way. And I go, Carl, surely you know somebody in your retirement community that would want to have their money work a little bit harder. And I could probably pay 12% and whatever. And so he was like, yeah, I'll ask around. Well, the next day, Carl calls me. He's like, hey, Corey, do you still want to do that 12%? And in the back of my mind, I was like, man, Carl found somebody. And he goes, Corey, listen, you don't know this, but my home is totally paid for. And if I could borrow money at 3%, and if you pay me 12, I can make a spread. How much money do you need? It was at that time I messed up everything that I was. And I said, Carl, I need $85,000. And he's like, yeah, no problem. Yeah, where do you want me to send it? And just like that, I raised my first piece of private money. And dude, that changed everything. And so I started raising and learning how to raise millions and millions of dollars. And then when the market started to get tight in around 2010, 2011, it was harder to find single family homes, at least the way that I was doing it, which was I was just surfing on the MLS.
The MLS, yeah. Mm-hmm.
Right? And so I remember driving by an apartment complex, and I used to drive, and it's the one I drive by all the time by my house. And I used to say, I wish I could own an apartment complex. But that day something changed, and I asked myself, how can I own an apartment complex? And dude, I mean, once I asked myself that question, my brain started working. And I'm like, I don't know what I know about multifamily. I'm like, not a lot. I go, where do you find information? Let's go to Barnes and Nobles. So I go to Barnes and Nobles, I read books. I end up finding a mentor. Short story, I bought my first apartment complex for $3.2 million. Mm-hmm. I raised $1.4 million in private money. Now, and this was in 2011, okay? So 3.2 purchase, 1.4 in capital. I sold that property last year. I've owned it for like 6 years. Last summer, I sold it for $8.8 million.
Good job, man. That's a good one. That's a good return.
What's more important, though, is what we did after that. We did a 1031 exchange, and I bought another property for $12.7. Then that one pays me like $375,000 in cash flow for like the rest of my life. And it only goes up because tenants expect rents to go up, and we never disappoint them.
Yeah, right. No, I love that. So here's what I want to do. I want to stop you right there because I want to set the foundation. You did a great start to setting the foundation of you making the transition from single family to multifamily. But I want to know a little bit more about that first deal, because that's the ground floor of, before you started jumping and catapulting into where you're at today with your business. And so you bought that at the bottom of the market. We know that. And you held on to it for a number of years, exited out at a great spread. And so there was a lot of equity built there. Let's talk about some of the challenges that you had. So obviously you knew Bruce. Bruce had this lifestyle that that you wanted to emulate. I mean, you wanted to live a very similar lifestyle to what Bruce was living. Unfortunately, Bruce was close to the vest. It sounds like he didn't really have an abundance mentality. He wasn't willing to be your mentor for you. And so you kind of figured out how to do it yourself. It sounds like you also found a mentor through another source, but there's still probably a lot of pain in that very first deal. So talk to me about some of the challenges that you faced with that first deal. Because again, you're kind of green behind, you're wet behind the ears, you're green going into this. You don't know what you don't know at this point in time. Everything's very much theory based, right? It's not real world experience.
Yeah.
Right? So
I just showed you the shiny version, right? That was the shiny object.
Give me the dirty,
let's talk about all the crap that
version.
No one knows about, right?
Yeah.
So, I mean, like, listen, I've got so many lessons on this first deal of what not to do. Actually, I found the deal I was at a real estate multifamily event, and I had these guys. I actually went to the events, and I said, hey, listen, I got a crap ton of money, and I'm looking for some deals. And so these two guys said, hey, we got this deal, and it looked like the right deal, and it was. Like, we went and visited it, and it was great. But here's what happened is what we agreed to do was I was going to put in $1.4 million, and I was going to get 75% ownership.
Wow.
Right. I was also supposed to, because they had like $100,000 hard, and they had a 30-day close, and they hadn't raised any money on the deal. And I had it ready. Right. And I could deploy it like that. So, but here's what happened though, is I was also supposed to have 75% voting rights. And somehow, I don't know how it happened. My attorney didn't see it. I sure didn't see it. But when we signed paperwork, I got my 75% of the profits, but I only had 33% voting rights. They had actually slipped in a page that said 33, 33, 33 as far as our voting rights. Well, those two guys now overrode anything that I wanted to do. And it was all my capital at risk. Mm. And you want to talk about now, and this is why it's even more I didn't know what I didn't know. Like on that first deal, I didn't even know what a PPM was, a private placement memorandum. I raised $1.4 million on unsecured promissory notes. Like these were my friends.
Yeah.
They've been giving me money for a long time, and they trusted me. I just said, hey guys, send me the money and I'll send you some paperwork. And it was all unsecured promissory notes. Mm-hmm. And so when I didn't have control of the deal anymore, I about lost my ever-loving mind. And so now I'm not proud of this moment, but let's just say I got on the phone and I called the first guy I called. Listen, you're going to sell me your shares right now. And I drove to his house. And so I basically made him an offer he couldn't refuse. We settled. And so for another $200,000, of which I didn't have, but I raised another $200,000 in secured promissory notes to pay him off. And I bought his shares. And when I did that, the other partner sued. So I was in a legal battle for almost 2 years because I didn't understand, know thy operating agreement is the lesson here. Know your operating. Know that, when it says a unanimous decision for anything, that's bad. Take that crap out of your operating agreement. It should always be, there should be no unanimous stuff on anything. It should be majority rules. And then make sure you're in the majority. I know to look for that now because I was new and green. I was like, oh, I'm just excited. I'm going to do my deal. I'm going to do my first deal. But that operating agreement is the guiding principles. And when you go to legal, it's got to be followed out exactly with the way it's spelled out in that operating agreement. And so we end up having to go to arbitration. The guy waited till the very last minute, till we were almost going to get foreclosed on a great cash flowing deal. This guy's an idiot. And I ended up having to pay him $400,000 to buy him out. Now, a good deal solves all problems. And when I made my $4.8 million profit, that story doesn't hurt so much anymore. But at the time, it was I was stressed out to the max, man.
Yeah, I'm sure. And time heals wounds too with real estate, at least. Typically, if you hold on long enough, even if you buy bad on the front side, if you hold on long enough, and that could mean 10, 20, 30 years, right? But typically time heals wounds in real estate, even if you've got into a similar situation like you had there, where you had to come up with money that you didn't really have, but ultimately it worked out in your favor in the long run because you took the time to let that asset get stabilized. Now you had full control over it. And ultimately, you're the one that won in this equation, right?
Yeah, without a doubt. Those guys.
Hopefully those guys know the story.
One does and one doesn't. So
yeah, and I'm not a spiteful person at all. So
if they would have played nice, they could have made so much money. But they honestly made my life a living hell. And the one thing that I did do right in that whole thing was I did take the time to really understand the deal, and I knew it was an absolute slam dunk deal. I knew that we could turn it around. I knew we could make it profitable, and we did. But that first 2 years of that owning that property was filled with just every moment these guys tried to hinder me and the process of trying to make decisions. It was really a painful battle. Now, here's what makes it worse. These guys, I just kind of come in at the back end of the deal, and I didn't understand what kind of loan they had. And we're talking about raising money. I'm like, okay, I got to pay my investors this much every quarter, right? And that's what we all agreed to. And then when we actually did the loan, we did a bridge loan, and they have what's called lockbox control. Okay? If you ever had a lockbox, let me tell you what that means. All the profit from the people paying rent goes into the lender's bank account, and then you had to request money to pay your bills. And they were not going to give out any money for paying my investors. And so, because it was just that kind of, because it was a bridge loan, it was a risky deal in their eyes because it wasn't stabilized, right? We bought the property at 70% occupancy. And so, and it wasn't financially stable when we first bought it. Now, 6 months later, it's humming like a song. I put a lot of work into it, but so it was a risky deal. Well, I didn't know though at the time that I wasn't gonna be able to pay my investors. So I'm like, guys, how do we, my investors are expecting to get paid. That's what we promised. Together, we all promised. When were you guys going to let me know that we didn't have this loan set up? This is my first deal. I don't understand these things.
Yeah.
So guess what? I had to go now borrow more money from some more people, unsecured promissory notes, for 2 years, by the way, to make sure I could make my interest payments to all my investors.
Oh, wow.
Oh, God. Again, a stress. That's another stress, right? And the whole time I'm just solving for X, right? I'm like, okay, here's the new problem I've got. Now we're turning all the time, the property's starting to do better. It's doing I can see it working, but I'm like, oh my God, here's another roadblock. Gosh dang, I got to that first payment's due. And I'm like, what are we going to do, guys? And these idiots, they don't have any solutions for it. Well, I don't know. It's your money. They don't have any interest in it. They don't care.
Yeah.
But I have a commitment to pay my capital. And so, I just solved for X and I got more money. And at the same time, I'm just like, oh my gosh, you don't know what you don't know. And when you start learning, experience, right, is like a summation of all your failures and your successes, right? They call that experience.
Yeah. And that's what I'm hearing, Corey. All I'm hearing when you're telling me this story, obviously there's lots of things that went right, a lot of things that went wrong, but the things that went wrong, really they're lessons, right? They're lessons learned from that. Better learn it today or right in the beginning than to learn those very hard, challenging, very expensive lessons when you're much more leveraged, when you've got, many more partners involved in the equation, when they're, instead of a $5 or $10 million deal, it's a $50 million or $100 million deal or fund structure with, it just, so they're lessons we learn from them, right? We have fail forward fast, right? We all know that saying, fail forward fast. And you weren't attempting to fail. And I don't suggest that anyone attempts to fail, but you're going to fail. Just know that that's going to happen. You're going to hit these roadblocks and these brick walls. But, we make money. Most successful real estate investors make their money by being problem solvers. And your other two partners kind of went running for the hills, not necessarily, but they kind of did, right? They could have ultimately been part of the solution, and they weren't. They were part of the problem. You were the solution behind it all. And
they didn't have any. Yeah, exactly. They weren't willing. They were not motivated, and all they could say was well, I don't know. It is what it is, right?
Yeah,
so
absolutely. I mean, I'm assuming it's probably most bridge loans are non-recourse, so there's non-recourse there, and really you're the one that's on the hook for the most part because you raised all the equity to do the deal.
And it wasn't non-recourse. So I had a personal guarantee on that as well.
Oh, really? Wow. Okay.
Oh my God.
Yeah, typically bridge loans are non-recourse, but
they are for me now.
Yeah, absolutely.
I signed my whole life on this deal, man. I swear. And knowing. I mean, I couldn't have picked a better property to learn so many lessons because I feel like I learned everything. I mean, more so than I would have on an easy deal. Like I just picked the hardest deal ever. That was really successful, but there was a lot of things in that deal that just like bad operating, know that operating agreement, know that partner, right?
Mm-hmm.
Understand your lending, like the lending structure, right? Knowing that you don't have to personally guarantee a lot of things, right? You shouldn't. And in the industry, it's not normal for you to personally guarantee stuff.
Very interesting. So I want to talk about now, because I know that you've done other multifamily deals, but then also, when you 1031, you sold this deal in 1031 that you 1031 into and correct me if I'm wrong, a student housing project. And since that time, you've also done another, maybe one or two student housing projects. And so not only are you in the multifamily space, you're also in the student housing, which is a subsidiary of multifamily, right? It's just typically students with their parents, guaranteeing the leases, which is, a very nice thing. But it's a different, but it's a different business model. So I want to talk about that a little bit because it very much is a different business model. It's got similarities, but it's also got some variances as well. And I'm a huge proponent of a focus, focus on one niche, one strategy until you become the expert at it. I see way too many folks that say, I'm going to invest in commercial real estate. And that could mean an office building, a multifamily property, a mobile home park, and everything in between. And I just want to own a bunch of commercial property. It's like, that's great. Fair enough. You should, right? But you should probably pick one first and get really good at it, master that craft before you go diverting your focus into other asset classes. And so I want to talk about how you've been able to specialize, and they've got similarities. So like, this isn't like, hey, I own apartment complexes and I also just happen to own a bunch of self-storage, right? Like you're not that far apart. So, but talk to me a little bit about the differences of the student housing side of the business, but also what really attracts you to that space in addition to the apartment space?
Yeah. So like in my mind, they're very similar, except that the fact that we have now shared communities, shared spaces, right? Mm-hmm. But the lease up, it's actually in my mind a little bit easier and to do student housing than it is to do regular apartments because like we know where all our tenants are at. They're right across. Typically, when we own a student housing project, we are super, super close to the college or whatever we're at, right? Like, so we know that all our potential renters are right there. Like, we don't have to try to figure them out, right? They're right there. And a lot of times, the colleges will work with us to keep our properties full, right? Because they like that, right? They like having housing available, and usually the colleges themselves are really not good operators at their own student housing. So sometimes they have their own housing, but like the properties that we've bought, that we've been able to buy, are specifically designed just for student housing. Like it's all students. It's nothing that would be rented to anybody but a student. Mm-hmm. But the real reason, here's how I transitioned, is because like I'm not the smartest cat in like school, and you'll see that I copy a lot. Okay, like Tony Robbins is modeling success, right? I like the word copy. It's a lot stronger. But I just asked my management company at the time. They're like, Corey, we understand student housing. We do that. They're in Columbia, Missouri, and there's a big college called Mizzou, and so they had the experience in operating. So like that was okay. Well then, great. So if we find a student housing opportunity, you have the systems and procedures. You guys understand how to do it, right? Yes, Corey, we like, and here's what we do. Like they mapped it out for me. I'm like, awesome. So when we found a student housing deal, we said, guys, here's what we think we got. What do you like? They're like, dude, we love it. And that's how we did it. Like, so I wouldn't have done it if my management company didn't have the experience. Cause I don't manage. I don't have a management company. I don't even do that stuff. Like, I still believe in Bruce's concept of sunsets and palm trees.
Mm-hmm.
So I really leaned heavily on my management company and said, do you guys understand this really well? And then I made sure that they proved to me. Once I understood their level of competency, right, or I'm not sure that's the right word, but I knew that they could do it and do it well. That's when we said, okay, well, let's add this to the tool belt. If we see something that looks like this, let's do it. Well, and just so happened, like, a couple fell in our lap. And so now I own like a total of 3 student housing deals. And they all cash flow really, really well. In fact, the first one that we bought it, that's Eagle Village. That's when I did my 1031 exchange, $12.7 million purchase. It was at 88% occupancy. That we bought it last October. And so this was our first school year, right, this fall. And we are at 100% occupancy with a waiting list. And like, our income when we first started was about 175 in total income. This last month, for the month of August, when it ended, it was 224. Like, we almost did $75,000 more in income than what it was currently running at when we first.
So what do you think the big differences were from the management style, from going from 88% to 100%? What did your new management company do that the old management company wasn't able to do?
Focus, right? So like, it's all about, so believe it or not, in the apartment industry, I believe we're in the people business, okay? We understand that we are, and we know this, we are in the people business. Our job is to create community. Our job for our managers, we mandate this, like, our managers live on site and our head maintenance guy lives on site. They have to own the product, right? Mm-hmm. They always have to be accessible. And that's one of our standard stamps of what we do. We think it's more valuable to have them on site than to rent that unit out. Okay.
And I don't want to interrupt you, Corey, but I'm going to real quick because I want to get a question in that has to do with living on site. Is there a certain size property that allows you to justify having those full-time folks on site there?
100 units.
Okay.
For student housing, well, it's like 100 beds, right? So 100 beds, 100 units, something that, it has to be able to produce and have people that live there. But it's our standard process. So we'll take off 2 units, right, and make that for maintenance, and that's part of their compensation package, right, to our team. Now, because that actually is a big incentive, by the way, and then they live there, they breathe there, they work there, and they own that asset. We believe that, like, because we're dealing with people, we're in the people business, and when you live in your community, like, you're going to manage that a little bit tighter, right? There's not going to be smoking, joking, and loitering in the breezeways, because, like, that's going to affect my manager's life.
Sure.
And she doesn't want that affected. And so she manages it, right? And she sets expectations. But the real reason, the way we set it up is we're really good at a couple things. Marketing. We call it advanced marketing. Honestly, it's pay-per-click and Google advertising. We are very good at honing in a circle and saying, this is our target market. Let's own it, right? And we've developed an easy way for people to go online, because at the property, we are paperless. You come in and you want to fill out an application, you have an iPad that you'll have to fill out the application with, right? And we are good with follow-up. We use technology to have a follow-up system. We have people that actually call. Our managers call the people that showed up. And it's just a really an easy recipe, but we just are very consistent and very diligent in the execution of that. Mm-hmm. And then the other part is that we got the college involved. So we went to, like, enrollment, and we said, hey guys, are you guys doing stuff for enrollment? We'd love to set up a booth. And they said, yes, we'd love to have you guys set up a booth. And, like, there you go. There's all our tenants. And now we got the college involved, and they're giving referrals our way.
So mostly just common sense items that you guys would be surprised that there's a lot of owners and operators of real estate. It doesn't matter if it's student housing, apartments, mobile home parks, where they just don't utilize common sense in their daily operations. And so everything you're telling me here of how you guys took it from 88 to 100%, it's not rocket science. It's not some proprietary method. It's basic common sense. And there's a demand there. You're basically just serving that demand, whereas the other management company was not doing a sufficient job of meeting the demand.
So 90% of what we do, where we find value in today's deals, right? Because the market's at, it's high. So you got to be able to buy it at a 7 cap and still make money, right? Yep. And so we do that through operations. And what we found is our operation paradigm is that we expect excellence, right? Now, here's an analogy. This is fun, but like our typical manager is not one that you'd look at them and say, that's the manager of the property, like that person. So we have a property, her name's Vera. Vera is like 80 something, right? You would think she looks fragile. And you're like, that's the property manager. And a lot of times, like we will take and we look for profiles, like think about a Walmart manager, right? Someone that works at Walmart, the managers of Walmart, by the way, at Walmart, they're the ones with the walkie-talkies, right? And if you ever watch those people at Walmart that are managers, dude, they are on the swivel all the time. They want to affect change. Now, typically those managers at Walmart have worked there for long periods of time. They don't make a lot of income, but they love the ability they're self-motivated, and they have the ability to communicate, but also to hold everybody accountable, right? Yeah. We can take those types of personality profiles and put them in our niche, our apartment world, and they do really well because we have systems in place, but we got to have self-motivated people that want to carry out our system, that like the ability, like, listen, this is my property. I'm in charge, right? They take ownership. They value ownership, and they really value praise, right? They'll work for little pay, and they want to feel important. And we understand that very well. And then, but we still compensate them well, especially with our housing bonus of living at the property. And so, like this Vera lady, you would think this, like, that's the manager. Are you sure? But here's the thing about Vera. On the second or third of the month, all of Vera's money is collected. Like, there's no outstanding money. Very seldom does Vera have any money out there that's not collected. And like, that's how she runs her ship. She has one of the most cleanest properties ever. And like, you're like, wow, Vera's a rock star. And absolutely she is. But you wouldn't know that by talking to her. You're like, oh gosh. And so that's really, we're in the people business.
Yeah, no, absolutely. And so I'm assuming your on-site property manager, are they employed by your management company, or are they actually employed by Kahuna Investments?
They're employed by my management company.
Yeah,
right?
okay.
So like,
Got it.
Here's the great, I just told you a whole story about something that I don't even own, okay? Now,
yeah, that's the best part.
That is the best part because, see, I've spent enough time with my management company, and this is how, like, they're my friends, by the way. Like, we've become very good friends. And now here's one trick that I believe, and what has made me very successful, is that I compensate my management company for, they're fee-based, right? So they get a percentage of all the money collected. But I give them an additional profitability. I give them equity of all my net profit. And the reason I do that is because it gives them the financial incentive to row the boat the same way, to think like an owner.
Help me define that a little bit more, what that structure looks like. Help me understand. So, I'm not getting it, so I'm guessing there's some folks that are listening, but a lot of things over my head though, Corey. So maybe break it down in the layman terms what that means.
Okay, so like, let's say we have an operation of a property, and they bring in $1 million. Most management companies will get 4% of the $1 million.
Yep.
That's a management fee.
Of gross.
Yep. No matter, it's just of collected rents, right? They collect $1 million, they're going to get 4% fee. Well, that's great and all and well. But so if anything of my net profit, so after we have all our expenses and I have my cash flow before taxes, right? That goes to, and after I've paid my investors, right? So the true money that's coming to Papa Corey Peterson, right? I say, my management company, I want to incentivize you. I'm going to give you 10% of everything that I make. Right? And I give it willingly. Now, it took me a long time to figure this out. Okay. This is not, when I found the right management company is when I offered this up. I didn't do it till I found the right one. But what it's done for me is now I have owner operators, my management company, or they think like an owner. They think like me. They want to protect keep expenses as tight as possible because they have an outcome in the game, right? Of all the cash flow, in addition to what their fee is, right? They have they want it to be more profitable. They have an outcome in the sell. When we sell it for lots of money, they have an outcome in that sell process. So that's going to keep them from stealing, one, for overfeeing and charging crappy fees that I don't like to pay. And I don't pay any fees. There's no extra that I pay my management company. I pay them a percentage, and I am a piece of my profit at the end.
Mm-hmm.
But what it's done for me is it allows us, we're all rowing the boat in the same direction. And for me, owning properties in all these different locations, and I live in Phoenix, Arizona, it keeps me from having to look over my back 24/7, wondering if we're doing the right things, because my management company has a financial incentive to do it right.
No, that makes sense. I mean, there's lots of companies out there, forget whether or not they're a real estate related company, that have a profit sharing model in place for their team members. And in our case, so this is the operational side of our business. This is the part of the business that either makes or breaks us, right? Yeah. And it just happens that they're not necessarily employees of Kahuna Investments, so you outsource this aspect of your business, but you're treating it as though they truly are employees of your business. I mean, they're partners in their interests are aligned directly with yours. So it's really no different than a company having an internal profit sharing model. Yours is just external, and it's with the partner that really helps you row that ship and helps you reach your own financial, destination.
They're excellent at it. Like, they do it better than I've ever seen. Like, I didn't offer this until I understood and knew that they were the elite, right? I mean, all my properties right now, we're either 97% or 100%.
Wow. Are they nationwide? Or are they just in a few select markets where you're at?
No, they're nationwide. They're mainly in from the west, from the Rockies to the Midwest and the South. But I bought a deal in Yuma. They're managing it in Yuma.
How many units do they oversee altogether?
3,500 units. I have about 1,000 units myself.
Okay, so that's a fairly small management company then. I mean, 3,500.
Right? Yeah. Listen, they don't want to be big. They're very So I met this is like a high school referral that said, hey, you got to meet these guys. I think you're going to really like them. And that's kind of how we met. And we dated for almost a year and a half. And then I was like, well, I've got a property that has this problem. Let me see what you can do. It was actually Lionsgate. It was my first property, right? It was doing pretty well, but the current management company had taken it as far as they could. Mm-hmm. And when my new management company took over, they're like, oh, Corey, you have a time bomb on your hands. You don't even know it. They're like, Corey, on the 15th of the month, most of your money is not even collected, right? They have been trained now to slow pay, and you're making fees, right, for them slow paying, and that seems like it's extra income, but that is not the correct way to do it. Well, they immediately took everybody and got them on that's in that unit and set them up on ACH draft. So, the next month, almost immediately, 95% of our money was collected on the first. Yeah. And I was like, oh, well, that's different. And then we started setting higher expectations, and we started raising the bar. I've been at 92%, 95% at that property. I thought, oh, that's pretty good. But we started hitting regularly 97 to 100, 100, 100, 100, 97, 97, 100, 100, 97. And that became the expectation. So the difference is in what you expect.
Yeah, it's funny. I agree with that. I don't know if this is like a C class or B class property, whatever it might be. But I mean, so obviously I've owned apartment complexes. Now our niche is mobile home parks. And it's funny. I look at a lot of properties and I'll get owners that are trying to pitch me on, the huge benefits and the profit and the late fees. But if you're honest with yourself, they're number one, you're training very bad habits in the folks that live month to month. These folks don't have the ability. If you literally give them the rope, they're going to take it. And if they get too far behind, they're never going to be able to get caught back up. It's
you cannot manage a property by saving money.
No. Also, what I found out is that if you're really dealing with that C grade tenant base that work, Walmart, make $10-12 an hour, that literally live paycheck to paycheck, right? Once they get trained to pay on the 15th and pay that late fee, what you're going to find is there's a few of them every month that always something small happens. They get a flat tire in their car, right? It pushes them past the threshold. And now they're at a point to where you're about to file eviction on them. So now you're kind of creating bad debt on top of that, what seemingly looks like profit on the late fees. And typically the bad debt either, it makes the late fees break even. So where there really is no additional revenue there, or it actually ultimately exceeds the revenue from those late fees. And so you're really not making more money, you're losing money. And it's best just to train the folks to pay on the first, because then it gives them another, if it's doing the first late on the 5th or late on the 6th, doing the first late on the 6th, it gives them another, typically, 25 days, depending on the month, to actually make, like if they fall behind because they got a flat tire, it gives them another paycheck in that cycle to actually get caught back up. Whereas if they're paying on the 15th, now it's too late. Like it pushes into the next month. And if you've got we file evictions on, X day of the month, it's too late for them. They've already filed eviction. Now they've racked up eviction fees, legal fees, and they're never going to catch back up, right? Like it's literally a death spiral for them.
Yes, it is. It is the death spiral, right?
If it's A-class tenants, different story. But if we're talking about people that literally, are blue-collar folks, it's completely different.
Well, the first thing that our biggest problem was is like a lot of them didn't have checking accounts, right?
Yeah.
So now, just by that filter alone, by saying, okay, from now on, you have to pay online. And so that's how all our properties now, you have to pay online, or you have a credit card or a debit card or something to pay online. And that's how we take all payments, right? Mm-hmm. We do not accept checks at all at the property. You have to go online and be like, you brought me a check. We don't take it. Go online and figure out how to get that done, right? Mm-hmm. Now, we actually, on the 2nd, you are late. We don't even have a 5-day grace period. On the 1st, rent's due. On the 2nd, you are now late, right? And those kind of standards, even 100% occupancy, because we believe in 100% occupancy, we actually have a status called a blue status. And when your property is in blue status, that means you are 100% occupied with a waiting list, and your collections are almost at zero, right? There's the metrics to be blue status. Now, here's the other thing, because we're smart. We have all our managers at all our locations, they have weekly meetings, right? And the people that are blue status, guess what? They're leading it. They're leading the meeting. Mm-hmm. And they're talking to, and so there becomes a belief pattern that 100% is possible, right? And it's expected. And that 100% plus all these other things is the elite. And everybody wants to be the elite, man. I want blue status. I want the recognition that because for what we do, that's when they get a call from Corey, the owner. Oh, the owner's calling, right? I want to congratulate you, and we give them some money, and we make it a big deal. Mm-hmm. And so that's just the people person of what we do. And honestly, it's not even me, right? It's my management company.
Yep. Does your management company, are they okay with you getting involved? If you make a phone call to one of the on-site managers to congratulate them, are they okay with you having that intimate connection with those on-site managers?
Yeah, I demand it.
Yeah, okay. Good. No, that's a good point.
Because, listen, we're a team here, and so I'm just part of the team. Now, I do not go in there and try to disrupt, but I will make, and this is part of what my job is to show up unannounced, right? I do not let anybody know that I'm coming. Right? Because that's how I check my management company. I believe in what they do, but my job is still to inspect and show up and be like, hey, I'm going to see what I see. Right?
Yeah, and absolutely.
I do that too, but I got to let them know that I'm still involved. So I try to look at my properties at least twice a year. I do one announced visit and one unannounced visit. Mm-hmm. That's usually how I do it. So
okay. Fantastic. One of the things we do, and it might be something, I don't know how far away your properties are. If they're within a few hours drive of you, then it's not necessary. But as you start to expand and you own things in different states, I know that you're looking at something in Iowa, which I don't know how far Iowa is from Phoenix where you live, but
that's a good flight.
Yeah, right. It's a flight. I don't think you're just jumping in your car and driving there quickly. One of the things that we've implemented into our business is we give each one of we have on-site managers as well. So we have an on-site resident manager that probably half of them live in the communities. The other half live very close to the community. It just really depends on the setup that we have at each one of the parks that we own. But we arm each one of them with a GoPro camera and very specific instructions. We have a video tutorial. It's very simple. It's 5 minutes long. It tells them how to attach the suction cup to their car, how to angle the camera. We give them a memory card. They have a Dropbox account where they literally once a month will drive through the community, start from the outside, start from, a quarter mile away, drive in, from both sides so we can see the entrance and drive, 4 miles an hour, go through the entire community, and then they upload that and the management company shares that with us on a monthly basis. So it allows our management company to know that Big Brother's watching over, and it also allows us to actually get a firsthand perspective of what's happening there today. Is there anything that needs addressed right now other than our on-site visits that we also do? This gives us a sense of security, that we can truly see what's happening there. And if we feel like they're not angling the camera correctly or something like that, which it happens every once in a while, we'll go on Craigslist and in the gig section, we'll hire someone for $100. Everyone's got a smart camera or smartphone nowadays that has a camera on it, and $100. In fact, we do this before we buy properties now. So before we even put an LOI on a property, if we're at the stage where we're like literally within 24 to 40 hours of writing an offer on something, we very quickly get on Craigslist, offer $100 or $150, which is a large amount of money for someone that's on the gig section trying to find like some short-time income. I mean, that's like jackpot for them, and give them very explicit instructions to do a drive-through with their phone, hold it out the window, go slow, take some still photos of the good, the bad, the ugly, and upload it to Dropbox, which most people know how to use, or Google Drive. And, technology is a wonderful thing in this business.
Dude, that's huge.
Yeah.
And really, that is, you just said it, leverage technology, right? So like we even have workflows. So like we have like one of the things we do at our properties, we change lighting. Like we believe in lighting, like LED lights. So we'll take every property that we buy, we will install what we call our lighting package. And we actually look at it and we test it to the Kelvin, right? We'll say, hey, we think, because you like how far these lights together and whatnot, and how much light, and we'll figure out the right Kelvin to produce the right amount of light. And then we install these. Now, to do that, a lot of times on these tenants, on the breezeways, there's a switch in the tenant's residence to turn that light on and off. And we want to take that absolutely out of our tenant's hands. So we have developed, and really I say this is my management, we have workflows to where my manager, the lady that's managing the property, can follow the workflow and say, okay, here's how I wire this thing. Here's how I take it. Here's how I put it to the little deal. Here's how I cap it. And like, we've actually made that as part of a community. Like sometimes we'll do the projects like, hey, let's get the whole team together. And after hours, we're going to work and like change some of the lights. And we make that part. So then they are affecting the property. And see, and the community is watching. And see, we never like to have construction zones at our property. Like we don't like construction zones. We don't like to do all the work at once. We like to say, here's all the list of things we want to do. Let's work on this one thing right now. Let's just do that. And so we do that little thing, we fix it, and then we clean it up, then we start the next project. And in our tenants' eyes, they're like, man, they are constantly working on this property. These are great owners. They're always fixing things.
No, I love that. I love every bit of that. No, that's great. I mean, you want to show that you actually care, right? That you guys are you're not just taking their rents, collecting the rents, and not turning around and putting it back into the property. You're not just lining your own pockets with it, right?
Yeah.
Residents are aware of that kind of stuff. I mean, believe it or not, in fact,
they start making that pride.
Yeah, no, absolutely. No, I love every bit of it. And I want to be conscious and respectful of your time as well, Corey. And there's a couple more things I want to talk about here. So I'm going to shift gears real quick if we could. Yep. And I want to ask you, every market's a little different, right? We can agree with that. And you own apartments in multiple different markets and student housing projects in multiple different markets. We know that every market's unique to itself. We know that interest rates are also rising. We know that it's been very tight as far as finding supply that makes sense, that we can get to pencil out, right? Cap rates are compressed. Everyone's chasing yield, yada, 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 right? We can agree on all the above. Yeah. So I want to talk to you, generally speaking, and this is really a two-part question. The first part of it is, what excites you about the market that we're in today, generally speaking, across the board? And then on the flip side of that, what scares you? What keeps you awake at night?
Good questions, right? So the first one, what am I excited about the marketplace? I'm excited about rising interest rates. I really am.
Why is that? And before you answer that, I see what I'm seeing, and they're supposed to go up again in December, but I'm seeing that sellers are still having a lag. I don't think most sellers and brokers are realizing that rates are going up, which ultimately, lower the price of a property, right? But
right.
There's a little bit of a gap there that it seems like prices are still, at their peak while rates are, and the cost of capital is still going up.
I see things happening that gets me super excited for the future. I believe as interest rates goes up, cap rates will go up way faster, right? That's just, we've seen it before in an interest rate cycle. As they go up, cap rates will go up faster. It will eventually catch up. And there's so many bad operators. Right now, everybody's pushing and trying to chase yield and trying to figure out a way to make money. And some of these people have no business being operators, right? they couldn't operate themselves out of a paper bag. And so at the smallest hint of a price change in rate or something that they do wrong, they are going to fail. And things are going to be coming on sale. There's going to be sales, and there's going to be ways to really make money, I believe, because there's so many people that are pushing in that really don't have the business, don't have the operations to actually be efficient in what they do. They're very inefficient.
Mm-hmm.
So I think it's just going to lead to more opportunity. So
okay.
Because it's hard for me to find deals right now. Like last year, we underwrote 752 deals. We bought 6.
Yeah. No, I feel you. I feel you.
But the 6, and I bought 3, and my other friends that are in part of with my management team group, like they manage for about 4 or 5 different groups, and I'm their biggest buyer. You know, total 6 deals, right? But the 3 deals that I bought are great. Like they're really well. So we have to kiss a lot of fun.
Yeah, no, we're very disciplined buyers as well. I mean, everything that we purchased are, they're rock star properties, and we always try to figure out a way to say no to a deal and try to kill a deal. Yeah, absolutely.
Kill deals, dude.
Yep. And we do all the time, and we get deals that are tied up, and there's nothing that would say that this thing is going to die. But the entire time, even while we're in due diligence, we try to figure out a way to kill it and to mitigate our overall risk in our investment risk. You
were talking the same strategy we have. Like our number one goal, we're going to a site visit, kill the deal, right? Find the thing that's going to kill it. Mm-hmm. Try to kill it, right? And then if it comes out on the other side and it's still a deal, then it truly is a deal.
Yep.
So that's what I'm excited about. Now, what keeps me up at night? Honestly, right now, I sleep like a baby, right? Because, and this sounds really weird, and I'm not trying to brag here, but like, we raise, I'm sure you do, I raise millions of dollars of private money. Now, I've had one deal that I didn't sleep like a baby, and for 2 years, I had sleepless, sweaty nights, right? Because I cheated on some of my metrics, right? It was my second deal I ever bought. I barely broke even. And because of that, I said, I will never, ever settle, and I will only do fat deals. I will only do deals that I know have huge potential and not one that I'm just trying to squeeze out a margin, right? And and we buy it based on cash flow. Our whole model is cash flow. If something does not cash flow, and it will cash flow fairly quickly, we will not do the deal. We say no a lot. And so by doing it and staying true to that goal, and I don't lose sleep at night.
Okay. Really that's good, man. You got to get sleep in order to have a sharp following day, right? In order to keep your brain on point.
Now, the only time that I would like lose sleep is when I've got to raise about $6 million and I have a little bit of time, like a short, I put a property contract and I'm like, okay, now I got to go raise capital. That will keep me up a little bit, right? Because I think about it until I get all the money in the bank, I'm a train wreck.
Yeah.
Right?
Yep.
But once I pull it all together, I'm like, I knew I'd do it. But there's that little thing out there, that little cloud of doubt, like, am I going to get this one done? And so that would be, if there's something that keeps me up at night, is when I have a deal in progress and we're raising a pretty good amount of money, over $5 million. I tend to, I'm very much focused, and I'm thinking about it when I go to bed.
Okay. So you sleep well. That kind of takes me to my next point before we wrap things up. You sleep well. That's good, right? We need the rest. And it's fun. It's funny. As I get older, Corey, I used to thrive on 6 hours of sleep. In fact, if I got any more than that, it would actually hinder my next day. Like it would actually give me a cloudy head. And so I've always been very disciplined. Even if I don't have to get up at a certain time, I've always been disciplined to never oversleep, which I guess it was a good thing, because now it's shifting a little bit over the last year or two. And I'm not sure why, because I got very healthy habits, but I need like 8 hours of sleep. So, but I've got daily routines. I've got morning routines I go through, both eating regimens and workout regimens. Talk to me about you, like kind of what keeps you on track from a personal perspective. We know that you sleep well, but do you have any other daily routines that you attribute to your overall success?
Man, I just surround myself with great people. I think that's really, I love my life right now. The only thing, if there's a distraction right now, it's called the info business, right? Just like what we talked about earlier, is that I've been pushing, I'm trying to create a whole educational thing. It's like it's a personal goal to give back. what I didn't realize is it's taking about 75% of my time to do this. But in 2019, we put in some new measures and stuff like that. But like, we go on really good vacations. My daily routine, I love working, believe it or not. I mean, I love working. I really enjoy
Me too.
Work.
Which is good, right? You got to enjoy what you do.
Yeah,
otherwise we call it work. In fact, you can't even call it work. You have to call. I love my passion. The passion happens to be, investing in real estate, right?
Yeah.
It's work if you really don't truly enjoy it.
But it's like you said, you have small kids. I have grown kids.
Yeah.
At 5 o'clock, I turn into a pumpkin. I gotta turn my business off because I'm a full-time dad still. I like going to my kids' football games, football practice, soccer practice. Saturday's game day. Sunday we go to church. Halloween's coming up. We've got like the spookiest. Like, I bought a CO2 gun, right? That goes shh, so I can scare kids when they come to my house. We do a haunted house at my house.
That's awesome.
And so it's like I just think you got to be connected, and spiritually, physically. Yeah, my New Year's resolution is to get back in shape. Right? I feel like this last year I've actually digressed in my morning routine. Actually, I have. Because I've been so focused on the stupid info business.
I don't know, man. I'm pretty impressed. We're doing this show. When we recorded, it was 11:30 Eastern time, which means it's what? It was 3-hour difference where you are. So, 8:30 in the morning? Is that right?
Yeah.
Is that right, Matt? Yeah. Which is pretty early to get up and do a podcast. So I commend you on that, because I sure as heck do not record any of my podcasts before like 10 o'clock Eastern time. I need to get my brain time to get rolling.
I'm used to dealing with all you East Coast cats.
Yeah. There we go. I know we talked about that, right? You got to adapt to our time frame, not your own. Well, good deal, Corey. Well, this has been a lot of fun, man. You shared a lot of gold nuggets with us here today. And what I'd like to ask of you, before we wrap things up here, if you had one final gold nugget of advice or wisdom that you could leave with our listeners today that might inspire and motivate them as they progress in their real estate investing career, what would that one last gold nugget be?
Man, the power of your brain, what's in between your two ears. I always wanted to be successful, right? I wanted to be successful. And I didn't really understand the power that you possess, because I truly believe if you will start believing it in your mind and start telling yourself. So when I made the commitment to be in real estate and at Edward Jones in that office, that was the beginning. But what most people don't see is daily I would wake up and say, I'm a real estate mogul. People want to give me their money. I am a capital magnet. And I would give myself that self-talk. What you say to yourself matters, and make it count. Mm-hmm. Say the right words at the right time and tell yourself that you are a rock star. And eventually, if you say it enough, you're going to start believing it. And that's when real change will happen.
Yeah, no, the power of affirmations, it's incredible. So no, I agree with you wholeheartedly on that. So in fact, I need to do more of it. I don't do enough of it. No, but that there's so much truth to that. That I know you're a big proponent of Tony Robbins, and he speaks a lot to that. And some people don't believe it, but I'd say don't knock it until you try it. Really.
Amen.
Yeah. Corey, this has been a lot of fun, brother. And, for those folks that are listening in that want to learn more about Corey and his company and just follow his overall success and what he's got going on, you can go visit him at KahunaInvestments.com. Again, KahunaInvestments.com. And Corey, that's all we have, my friend. Really appreciate you joining us. And I look forward to following your success and having you back on a future show, man. So I guess until we meet again next time, which hopefully here is in the next couple of months at the next mastermind or one of the masterminds coming up, you stay well, man, and keep doing great things.
Rock and roll, brother, man. I look forward to it.
Congratulations! Now you've got more of the best tricks of the trade in building massive amounts of passive income from real estate. For more amazing resources, visit realestateinvestingforcashflow.com, and we'll see you next Monday morning.